Welcome to Capitalize Your Finances, the podcast that's your ultimate guide to mastering personal finances and unlocking the secrets of entrepreneurship. Each week, we dive into the world of personal finance and business development and have fascinating conversations with industry experts, seasoned entrepreneurs, and thought leaders who share their insights, strategies, and stories to help you get ahead in life. Whether you're a seasoned entrepreneur looking to scale your business or someone just starting out on your financial path, this podcast is your go-to resource for inspiration and actionable insights.
Welcome back to Capitalize Your Finances. As always, I'm your host, Christopher Panayiotou, certified financial planning professional, the Cap in Capitalize. And on today's episode, I'm going to teach you how to reduce your stress around money. But as always, before we get into the crux of the show, the free advice for the week. As the year comes to a close, make sure tax planning is one of the top topics, say that 10 times fast, of discussion for year-end planning, but don't overemphasize it. Too often, far too often, people are penny wise, pound foolish when it comes to taxes. In particular, tax loss harvesting at the end of the year. And again, I'm not saying this is not important, but far too often people get cute with this strategy, and in the long run, they miss out on owning wonderful assets, whether that means companies, real estate, you name it. Sometimes it's okay to pay the tax and move on. So now that free advice is out of the way, let's get into how to reduce your stress around money. And when I was thinking about this episode, I came up with my top 7 tips on reducing the stress around money. And there were just a plethora of other ones that I had, but frankly, I think my top 7 tips on reducing stress around money is going to gift you the most bang for your buck. And this is really in no particular order, but we are going to start out with number 1, which is working with trusted advisors. So you are going to, if you want to, because some people like to do it on their own, but if you are not one of the crazies out there that wants to do it on your own and you want to hire a team around you, you're going to want to hire a true fiduciary financial planner, certified financial planner. Again, you could hire a financial advisor. I've said it in the past. I'm going to say it again. I think financial advising will be extinct in the next couple of years. You're going to want to hire a quality certified financial planning fiduciary advisor. Now, what does that mean? A fiduciary means that you are putting your interests off to the side and those interests of your clients are at the forefront. And within your certified financial planning boards, which again, I have that, you should be automatically doing that. However, it gets very confusing and convoluted because people assume that if you say you're a fiduciary, that means that it is that you're always putting the needs and wants of your clients in front of yours. And I want to touch on this just a little bit more because a lot of people talk about the fee conversation. And shocker, being in the world of financial planning, you are not a nonprofit. You are going to have to get paid for your service because it is a business. And a lot of people think that paying a commission is not fiduciarily responsible. That is the stupidest thing I have ever heard. And here's why it is ridiculously stupid. So let's say someone came into my office and I go through their plan and, there are more often than not cases where you charge a reoccurring fee for, say, a stock or mutual fund portfolio, because if there are trades that need to be met based on whatever reason, it's going to quickly add up. And so if you charged a commission for all of those trades, it is going to be way more expensive as opposed to just charging a flat fee for your service. Well, on the flip side, let's say that there was a part of your portfolio where it made sense to buy a limited partnership piece of real estate. And that piece of real estate, once it's bought, it's going to sit there. That company is going to make their money on the back end. They front the commission on the front side. So you're not really paying that again until on the back end they earn their keep. They actually perform for you. Why in the world would it make sense to charge a reoccurring fee for something that is going to sit there? Doesn't make any sense. But you've got these other groups that say, well, we're a fiduciary. We don't charge commissions. We charge ongoing fees because that means that we're putting our interest behind you. How in the world does that make sense? It doesn't make any sense. And I could name drop a number of firms out there. I'm not going to, because I'm not going to give them the time of day. But just know that from a fiduciary standpoint, if you're going to talk to an advisor, I don't want to step on my own toes here. If you're going to talk to a qualified, certified financial planner, you are going to want to ask them, what does fiduciary actually mean? And explain that further. And if they tell you a bunch of jargon and it's not really making sense to you, you need to go find someone else. Another question you can ask your certified financial planner is, show me your portfolio. Why are you not recommending that to me? Why do you not have any of what you recommended to me in your portfolio? That's going to quickly tell you if you've got someone on your side or not. Now, financial planners are not the only people that you're going to need for in the world of trusted advisors. You're going to want a team which includes a CPA, again, certified financial planner, CPA, or enrolled agent, a state attorney, insurance advisor, and you may even hire an investment manager to delegate and organize your financial decisions. But that really falls under the certified financial planner description. And you're going to want to schedule regular reviews with these people. Generally speaking, I'll just tell you how I work within my business. I meet with clients on a quarterly basis. With exception, there are a few clients where I actually meet with monthly, purely because they've got a lot going on, especially in this moment in their lives. But we also have clients where we meet twice a year, in some cases even once a year, because there really isn't a need to revisit things any more often than that. So the point is, you want to schedule those reviews accordingly with your team. The second tip I would take in terms of reducing the stress around your money is simplifying your finances. So how do you simplify your finances? Well, you're going to want to consolidate accounts. So you're going to want to reduce the number of bank accounts, brokerage accounts, investment accounts. It's just going to make it easier to manage. And if you've got a company retirement plan, you've got previous company retirement plans and an individual retirement account, you could consolidate all of that into your current company retirement plan, if that is the right option for you. Same thing with Roths. The only thing is, you can't take a Roth IRA and roll it into a Roth 401k or Roth company retirement plan. It's just a weird rule. I don't write it. I'm just the messenger. Another way to simplify your finances is to automate. Bill payments, charitable giving, investing, these can all be automated to reduce decision fatigue. One piece of caution with that: don't get too comfortable with automation, because then you forget where your money's going. So you need to stay on top of things. There's no such thing as 100% passive X income, automation, money thing. Even if you have a financial planner, you still want to stay on top of things within reason. And then the last way to simplify your finances is set clear buckets up in different types of money. For example, you could have a lifestyle spending bucket, long-term investing bucket, legacy or estate planning bucket, a philanthropy bucket. The third piece of advice to reduce the stress around money is establish a purpose to your wealth. And I'm not going to turn into Tony Robbins on this podcast, but you are going to want to clarify your values and you want to align your spending and investing with what truly matters, whether it's your family, causes, impact. Word of caution on the investment side of things. A couple years ago, actually not a couple years ago, about a decade ago when I started my practice, ESG investing became extremely popular. As of late, DEI investing has become popular, although that's been killed for a number of reasons. The reason why I bring that up is whether it's ESG, DEI, whatever in God's name it's going to be later on in life, why I'm telling you to have a cautionary outlook on these funds or types of investments is Wall Street's not dumb. And they understand, in many cases, emotional unintelligence with money. So they construct a lot of these investments and portfolios that sound really, really good, but they're doing it really just to get your money. And they jack up the expenses. Their returns are not as good relative to what you could have done elsewhere. And it's completely subjective. It's completely subjective. And I'll just pick a company. I'll pick Tesla. Okay, I know that can be a little controversial, but I've seen funds in the past, ESG funds, where one ESG fund has Tesla in it, the other one doesn't. It's completely subjective. It's one thing to say that you're investing in companies that have between $1 billion and $2 billion a year in revenue, something like that. That is very quantitative and objectively measured. When it comes to aligning your values and impact, it's pretty subjective. So be really careful because a lot of these people are tugging at your emotions to really just get your money. Another piece of advice when it comes to establishing a purpose to your wealth is creating a wealth mission statement. In really both of my books, I start out with getting you to understand what is your purpose. And by doing that and understanding qualitatively why you're doing what you're doing, that will guide you so quantitatively throughout your life, you actually understand why you're doing what you're doing. It saying it another way, it helps ground your financial decisions in meaning rather than fear and greed. The third piece of advice in terms of establishing a purpose to your wealth is philanthropy and understanding your philanthropic endeavors. When you give intentionally, whether it's your time or money, that will reduce your guilt or aimlessness around your wealth, which indirectly will reduce the stress around your money. Now, the fourth tip to reducing the stress around money is setting boundaries. There's a multitude of ways that you can set boundaries around reducing the stress with your wealth. One of them is family dynamics. Establish clear boundaries and expectations about financial support, inheritance, or business involvement with your family members. Another piece is privacy management. Protecting your personal and financial data is key, especially in this day and age. And all things being equal, the more high profile you are, the more important it will be to protect all of this data. And that is going to reduce your anxiety massively. The third piece of advice regarding setting boundaries is avoiding overcommitment. You need to learn to say no, especially when it comes to investment pitches, donations, financial favors. That is going to be key. So before we keep going in this episode, we're going to take a quick commercial break. And then when we come back, we are going to get into investing in education and communication and tying that all around the stress around money. So don't go anywhere, stick around.
Are you ready to transform the way you approach sales? This episode is sponsored by the second book in the Capitalize series, Capitalize Your Sales, the all-in-one sales framework that saves you from ever struggling again and teaches you how to sell with sincerity, which dives deep into the art and science of driving sustainable growth. Packed with strategies that go beyond surface-level techniques, This book will help you understand what it takes to truly connect with clients, build long-term relationships, and close deals. Whether you're looking to fine-tune your sales craft or break through to the next level, Capitalize Your Sales offers a roadmap to success designed for today's fast-paced business world. Head on over to your favorite bookstore, order today, and start capitalizing your sales immediately. And now, back to the episode.
Welcome back to the show. We're going to get right back into how to reduce your stress around money with number 5, investing in education and communication. Financial literacy for the family is huge. And I really don't know why in today's day and age that people don't talk about it. I get it in like the 50s and the 60s and 70s when you had parents that, in the 50s, like parents they would never say that they loved their children. They would keep everything close to their chest. That's really, really, really bad. And today we're much more open in terms of sharing feelings, mental health, things of that nature. But for whatever reason, the topic of money has just lagged the evolution. So financial literacy for your family and teaching your heirs and your, if you're married, your spouse, how money works. And if you are a kid, talk to your parents or grandparents about asking them how their money works or how it's worked. That is going to help reduce long-term stress and dependency with money in more ways than one. Another tip would be family meetings or retreats. Now, I don't want this to turn into some like cultish annual thing, but regular communication, it's going to prevent misunderstandings with money and the intent of money in conflict. Now, this one's a little extreme, but again, we all have different viewpoints, and some of you listening may get very stressed with money. And if that's the case, and we're talking extremes, talking to a certified financial therapist or getting coaching on it can be valuable. And sometimes that's above and beyond a certified financial planner's role because they're not a therapist. They're your certified financial planner. I can tell you, and I got to give a shout out, Joyce Martyr, who wrote the foreword in my first book. She is a financial therapist. And she understands the world of financial therapy and the emotional understanding or lack of understanding people have with their money. I don't know why this is the way that it is. I can kind of guess, but I don't want to inappropriately guess. Wealth can bring guilt. It can bring identity confusion. It can strain relationships. That one I get. But addressing all of those issues with your financial therapist or coach will help bring long-term peace. The 6th tip on how to reduce your stress around money is maintaining a healthy relationship with money. Now, what does that mean? You need to avoid over-monitoring your investments. Watching the market or your investments daily will add stress. Let your advisors manage this for you. Now, I'm going to speak for myself. I look at my portfolio every day, but I don't look at it every day on the over-monitoring standpoint. I look to make sure very quickly that everything is in order. Another piece to that, have I'll call it a fun allocation. You have to allow yourself to enjoy wealth without guilt. And that, it sounds so simple, but it's extremely profound on reducing pressures and boosting your happiness. I remember Shaq was on a podcast talking about how he thought about money. Now, granted, Shaquille O'Neal has more money than 99.99999% of us will ever dream of, but the advice still stands. He took a piece of paper, ripped it in half, took half of that, put it off to the side. He said, okay, you're not going to see that. You're going to invest that. Then out of that remaining half, you took a portion of that and you set it aside for taxes. I might be butchering the story a little bit. And then you take whatever's left over that, you take half of that, and then you put it into savings. And then the rest of it, you could spend on fun stuff. And for him, it was, jewelries, cars, whatever the case may be. That example is pertinent, though, to you when it comes to your fun allocation. And we would all love to make the money that Shaq is making, but his advice, it works really, really well. So Shaq, if you're listening to this, thank you. And also, we would love to have you on the podcast to talk about your business ventures and your philosophy on personal finance. The third piece that I want to mention on maintaining a healthy relationship with money is practicing gratitude and perspective and reflecting on your financial security and what you've built up and how it frees you rather than traps you. And if you're trying to figure out how to practice gratitude and perspective, strongly encourage you. And I got to give a shout out to Kristen Butler, who wrote the foreword in my second book, Capitalize Your Sales. She is a master at understanding the power of positivity. I mean, that is literally her movement, and her positivity journal has been life-saving and life-changing for actually a lot of my clients and fans of my own. So give Kristen a look up if you're trying to practice gratitude and perspective. And then the seventh and final piece on how to reduce the stress around money is preparing for the uncertainty. As far as stress testing your financial plan, and that could mean planning for unexpected downturns, emergencies, major life events, that could, by stress testing that, you will reduce your financial anxiety to the nth degree. Yes, setting up a proper emergency fund, is going to be paramount 3 to 6 months. Yes, understanding your cash flow is going to be paramount. One thing that I'm not a huge fan of, there's something called the Monte Carlo simulator. And basically in our industry, that's like the gold standard. I think it's a piece of crap, but what it does is you plug in all of this information and it pumps out about 10,000 different outcomes, and it gives you the probability of success within your financial plan. James Tomlinson, I believe it was 2017, I was reading an article that he posted on Advisor Perspectives on why Monte Carlo simulators simply don't work. And I don't need to get into the weeds on why they don't work. I think I've actually talked about that more than enough in the past. But the point is you need to gauge and stress test, especially for today, on if anything happened negative, how secure are you? But anything in the long run, you just need to understand prudent policies and procedures that you need to apply for your long-term investments. Now, another way to prepare for uncertainty is ensuring proper insurance coverages, health insurance, disability insurance, liability insurance if you are of higher net worth and you've got a lot of liabilities out there, asset protection policies. These will all help to prevent a catastrophic loss to you and your family. And then the last one, and it's not the most fun, but it's extremely valuable, update your estate plan regularly. Knowing your legacy is properly structured will reduce long-term anxiety like you would never believe. And when you add all of these 7 items up, it is going to be impossible not to reduce your stress around money. So that does it for today's episode. For those of you that are new to the channel, welcome. For those of you that have been around for a while, I thank you as always for listening in to Capitalize Your Finances podcast. As always, I'm your host, Christopher Paniotu, certified financial planning professional. And until next time, keep capitalizing. Take care. As always, thank you for joining me today. If you have questions about today's episode or any personal finance questions, please reach out to me at Cap and Capitalize on Instagram, Chris@capitalizeyourfinances.com, or via our website, capitalizepodcast.com. If you want more Capitalize Your Finances content, head on over to capitalizepodcast.com and check out our blog, free resources, book, and online course. As always, I'm your host, Christopher Paniotu, certified financial planning professional, the Cap and Capitalize. And until next time, keep capitalizing.
The information provided should not be considered specific tax, legal, or investment advice and is not specific to any individual's personal circumstances. Each taxpayer should seek independent advice from a tax professional based on his or her individual circumstances. Stock investing includes risks, including fluctuating prices and loss of principal. Before investing, carefully consider a mutual fund's investment objectives, risks, charges, and expenses. To obtain a prospectus or summary prospectus which contains this and other information, call your financial advisor. Read the prospectus carefully before investing. IRA withdrawals will be taxed at ordinary income rates. Withdrawals prior to age 59.5 may also be subject to a 10% penalty tax. Roth IRA distributions of principal from a Roth IRA are tax-free. However, any earnings will be taxed at ordinary income rates, and a 10% penalty tax will apply if withdrawn prior to age 59.5 or within 5 years of the date the Roth IRA was established, whichever is longer. Distributions of principal from a Roth 401k are tax-free. However, any earnings will be taxed at ordinary income rates, and a 10% penalty tax will apply if withdrawn prior to age 59.5 or within 5 years of the date the Roth 401k was established, whichever is longer. Your investment options are limited with the Roth 401k to those offered by the plan administrator. Charges and fees may be incurred. Information on investment products is for informational purposes only and does not constitute an investment recommendation or a solicitation to buy or sell the investment products described. An asset allocation strategy does not ensure a profit or protect against loss. Christopher Panayiotou is a registered representative with and securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. Capitalize Your Finances LLC is a separate entity from LPL Financial. Capitalize Your Finances is not registered as a broker-dealer or investment advisor. CRPS conferred by College for Financial Planning. Any other individual or company mentioned in this podcast are not affiliated with Capitalize Your Finances or LPL Financial. LPL Financial California Insurance License Number 0518721. LPLIA California Insurance License Number 0B91442.